Hello everybody, welcome to another interview with one of our FTMO traders, and today we're having Bernd from Dubai in UAE. So Bernd,
Hi, how are you doing?
yeah, I'm doing quite well, thank you.
Very glad to be here. It's my pleasure.
Yeah, happy to hear that. So I assume you're doing well as well because you've had some nice payouts lately, but we'll touch upon to that more later on in the interview. So before we start, guys, for those of you who might be watching us for the first time, FTMO is a proprietary trading firm, and upon passing our evaluation process, you get to manage your own FTMO account with up to $200,000. So, Bernd, again, happy to have you here. Could
Likewise,
you
guys, I'm happy.
good? Could you introduce yourselves a little so the viewers know who they are watching right now?
Yes, so my name is Bernd. As you said, I'm from Dubai. I live in Dubai since now almost 14 years. I'm 39 years old. I'm actually a full-time trader since almost 10 years, since a decade. I'm the CEO and the founder of an licensed investment consultancy here in Dubai as well, with a focus on trading education. So we educate traders as well. And I'm also a fund manager. So I'm in the trading business since now almost a decade. And just recently in June, I started that FTMO journey, actually. Yes.
Okay, so how did it start? So you said you're 39, you're trading for about a decade. So you started trading when you were approaching the year 30 in your life. So
Yes,
usually people
exactly.
start earlier than that. So what were you doing before, and how did you just move to trading?
Well, this is kind of a long story, but I try to cut to the chase. So I have a normal business degree, university degree. I moved to Dubai right after my studies, actually, and I got a job in the automotive sector. I was actually working for Audi Volkswagen, the Volkswagen Group here in Middle East, for the headquarters steering the entire Middle East, and I had like a marketing sales interface position. And I was doing that for 5 years. And at some point of time, I was in Dubai, right? It's kind of tax-free salary. So I was earning a good amount of money. I was saving a lot of money, and I was saving more and more. And all that money was basically ending up on my bank account. I was not spending a lot. And at some point of time, I was basically thinking, what shall I do with all that money, right? I would like to invest. However, since I come from kind of that university background and my whole life, basically, I studied to gain skill and to gain knowledge.
Mm-hmm.
I didn't want to just like take that money and just invest it blindly or trust kind of a third-party provider, these so-called wealth advisors, to give them my money and just to invest for me. And I have no freaking idea what's going to happen with my money. No, I wanted to learn that skill myself. And since I just said I come from a university background, I was like, well, there must be a way to learn trading as well, right?
Mm-hmm.
There must be like a professional way to learn trading. I mean, there's what I was always how to say it, right? There's a lot of content out there in the internet, YouTube, articles, books, but I was always like, is this the right approach to learn a skill, right? It's like if people use a little bit of common sense, right, to learn any other profession, like becoming a doctor, becoming a lawyer, becoming an engineer, you have to go to school, right? You have to have like a degree. I mean,
Yeah.
you need a couple of years of practice and studying. But when it comes to trading, most of the times it's like, hey, take my 7 days course and then become a trader, right? So I was like always a little bit of that's maybe not the right way to learn it, right?
Yeah.
So I was doing a little bit of this was back in 2012, 2013. I was doing at this time trading was not that popular yet, right? I mean, Now it's completely different 10 years later. But so I was doing a little bit of research, and I found this school in the US that is that sounded like very professional, trustworthy as well. And they had a lot of instructors who were like former floor traders, like floor traders from Wall Street, floor traders from Chicago Mercantile Exchange, from New York Stock Exchange. So I basically became a student there. And this is like, I had a couple of mentors who were then basically, to name one, I can name one.
Sure.
Bob Dunn, who is a former floor trader at Chicago Mercantile Exchange, trading futures. I had another one who was one of the biggest market makers for natural gas in New York. So I had a couple of mentors that I call mentors who were like former floor traders, and they shaped, I would say, they shaped my trading career, and they from them I learned basically the skill how to trade. And this is where I started. When I started the journey to learn how to trade, I never went with the intention to become now a full-time trader, quit my job and become a full-time trader. I just wanted to have a side income, right? To do something with my money, like professionally.
Sure.
To invest my money that I earned in my corporate job. But at some point of time, actually, that side income became more and more and more and more. And kind of at some point of time, I earned exactly the same amount of trading that I had with my corporate job, right? And consistently, not only once a month, not only twice a month, but consistently. So I had two incomes, right? Trading and with my corporate job. And then I had like the luxury of making the decision, hey, do I want to keep two jobs, right? My corporate job and trading on the side? Or do I want to ditch and quit my corporate job that I anyway didn't like so much? I was not really passionate about that, not at all.
Yeah.
And do what I'm really passionate about, trading, trading, right? So I was like intrigued about trading, super passionate about trading. Trading was my whole life back then. It's still obviously, but I was really, this was my passion, right? So
the choice was clear.
Yes, I mean the choice was like, I think professionally this was the first very the clearest decision I've ever made and the best decision I've ever made, right? So I found my passion. So I always meet people who like knew from the very beginning what they want to become in life. Like I want to become a doctor. I want to become a pilot, you know. Like, I never knew what I want to do. Like I never had a passion for anything. Suddenly, then this trading happened, and this was like, yes, I found my passion, and ever since. Then I quit my job actually after roughly 1 year. Actually, I was rather quick. I quit my job, and then I was a full-time trader. First, then I was like just full-time. And the way how we trade, we are not day trading, and this is maybe a point that we touch on later on as well. I don't necessarily believe in day trading and in sitting in front of the screen 24/7 and staring in front of and staring at the screen for 8, 9, 10 hours. I don't think this is sustainable. And we also don't, with trading, right? We don't want to replace one 9 to 5. We don't want to replace one 9 to 5 job with another 9 to 5 job. Trading should give us the freedom basically to do more with our free time, right? So the way we trade, we don't need a lot of time in front of the screen, right? So maybe I can touch on that later on a little bit. But interestingly, I had a lot of free time all of a sudden, and I was already living in Dubai, and well, you can imagine I had like maybe it took me 1-2 hours per day on average in front of the screen. The rest of the day I had a lot of free time, so I explored all the beach bars and the beach clubs in Dubai. So I know them by heart. You can imagine, like seriously. But you know, this at some point of time, this has no purpose, right? I mean, this is like kind of boring. It's like trading at some point of time also becomes a lonely business, right? Because you do it for yourself.
Yeah.
So I was doing that for kind of 6 months or so, like every day, beach club, beach club, a little bit of trading. It became super boring, right? And then eventually this trading school where I learned how to trade, they approached me and they asked me, hey, because they opened a franchise in Dubai as well, and they asked me, hey, do you want to maybe teach on the side as well? Come twice a month during the weekends, teach the new students, share your experience. And I was like very happy that they approached me, that I, were able to talk about my passion, because, as a trader, if you're passionate about what you're doing, you like to talk about that.
You like to share it.
And you like to share it, exactly. And you cannot share it with everyone. People usually don't understand like what trading is all about. And these discussions are then, very superficial, and you need to kind of discuss trading with like-minded people. Otherwise, this doesn't make any sense.
To be honest, I think this is the same with every passion, with every hobby you have, right? You like to share it, you like to talk about it, but mainly with the people who understand what you're talking about.
Exactly. Otherwise, it becomes just like a very, very superficial discussion. And you're absolutely right. So I was able to do that, and I was very happy. But yes, I was doing that for a while as well. So I was like doing a little bit of teaching new students and trading with my own money, obviously. And then this was in 2017. Myself and another traders, we had this idea of doing, establishing our own school, our own investment consultancy. And we started that like kind of, I would call it back then project, right? We never knew like how this is going to end up. But we started a project in 2017, early 2017, and it took us 2 years, like, because we developed our own trading platform. Now we have also our own trading platform for our
own trading platform.
Yes.
Okay.
Yes, our own. So it took us 2 years to develop. So we have our own social trading platform where our students have access to, where we do daily live trading sessions for our students, where we share our trade ideas, our trades, our trade setups, you can call it maybe signals, but it's more like very sophisticated trade ideas. Where we do live trading, where we educate people. It's also our virtual trading floor. We have developed everything from the scratch. And it took us 2 years, and then we eventually launched it. We licensed investment consultancy, because we are licensed. It's very important to understand. We are not just any other educator out there, signal provider. We are in Dubai, a licensed investment consultancy, and we launched it in 2019, and this is what we are doing ever since. So we have this licensed investment consultancy with focus on trading education, our own trading platform. We trade for ourselves. I personally also manage some funds, so you could call me hedge fund manager as well. And we educate and teach people, so we can share we work on our passion 24/7 nowadays. So this is what we are doing in a nutshell, and what I was doing in the past 10 years. And yes, and just recently, right? So because I was introduced to FTMO, right? This was in June. I know about prop trading firms. I was introduced already 5 years ago. And to be honest, and let me be frank, very frank here, 5 years ago when I was introduced to prop trading firms, I was never a huge fan of prop trading firms. Why? Because they limit the trader. So at this time, 5 years ago, I don't know how this changed throughout the years, but 5 years ago, they limited the trader in the sense of you were only able to trade like a handful of products. It was like limited in terms of day trading. You had to close your trades at the end of the day. And back then, I was like, this is not the right way to do it, right? This is not how I personally trade, so this is nothing for me. And then just recently, I was never really curious again about like the prop trading firms. And then just recently, a business partner, he told me about FTMO, and I was like, no, prop trading firms, this is not for me. This is not for me. This is nothing. I know about that. I was like very, very naive, right? So I was like, no. 5 years ago, I tested that back then. It's not for me. And FTMO is different. He was like, FTMO is different. Have a look. I was like, no. I was like, please, trust me. Look at FTMO, and this is different. So I was like, okay, let me go to the website. And then I was like reading through the details. I was like, okay, that makes sense. This makes sense. Wow, okay. I was checking the markets. Wow, I can trade all the markets, even stock CFDs, crypto CFDs, all the markets. Do I have to trade? Do I have to close the trade? Can I keep the trades overnight? Wow, I can keep the trades overnight. Can I keep the trades over the weekend? Wow, I can keep the trades over the weekend. It was like wow, there's no limitation to the trader. This was perfect. It was really perfect. I've never seen something before, so kudos to FTMO. Like no limitations to the traders, right? I have to say that. And I was starting that process, just doing that $200,000 challenge, right? This was like I paid for that $200,000 challenge. I think I completed that $200,000 challenge in less than 2 weeks. Then the verification took me another 1 week or so to complete, and I started trading. I think the first month I made like $50,000 or something. And then in parallel, I was like, okay, I can do another. I was not aware of that. I was like, I can do even another challenge, and I get to like what they call FTMO, what they call max allocation, $400,000, perfect. So I was doing another challenge, and well, I think I completed that even earlier, like 7 to 8 or 9 days or so. At the verification, it took me literally only 3 days. So then I had that max allocation as well after like almost after 2 months. I now have like $400,000, and last month was my last month. I think I was still trading with $200,000, so I got the platinum certificate with like $50,000 payout, I think.
Yeah.
So for me personally, this FTMO is like amazing because of 2 things. Of course, it's like you don't have to trade with your own money. I mean, right? You're kind of managing a fund, right? FTMO's money, so to say. And secondly, what is even more important than the money for us, we can eventually show what we are capable of doing in the market. Because right when it comes to trading education and kind of all this, let me call it trading education in general. The problem is there are so many educators out there, and on social media there are so many traders out there that you might think every second person is a full-time trader and is trading successfully, right? But when it comes to kind of proving their results and proving what they're capable of, then it's usually like you have to just trust them, right? You have to just trust them. And when it comes to FTMO, everything is verified, right? I mean, even on the certificates, there's this barcode and the barcode. So it's completely proven, it's completely transparent. So for us, as a licensed investment consultancy and education provider, so finally we have some kind of place where we can go, where we can say, look, these are our proven results. I'm a consistent, profitable trader. This is what I'm capable of doing. So now it should show me that you're also profitable, right? If you tell me that you're a trader, show me that you're also profitable, right? So this is how for us really like to showcase and what we are capable of doing. So this is perfect, right? I mean, I love it. Now FTMO, I really love. I really have to say it's amazing.
Right. So, well, it seems that FTMO was the the perfect fit for you. Also, I like to touch upon the profits you mentioned. So, I believe on the last FTMO account, or with the last payout, you made about $40,000. Is that correct?
Yes, I think so. Yes, the second month around $40,000. Yes, maybe yes. Overall, yes, could be. Yes, could be true. We can go through the certificates, but yes.
Okay, and also what I like to discuss a little is that you trade mainly stocks. Is that right?
Yes, so I trade mainly equity indices and stocks. So anyway, there's the right, the Dow Jones, Nasdaq, S&P 500. Anyway, the stock market in general, very correlated market. So indices, stocks, one drives the other. So yes, I predominantly trade them. This is my thing. Yes.
So I assume you're focusing mainly on the fundamentals, right? Will drive the market, or would you call yourself a technical trader rather?
Very good point. What I would call myself, I take the best of two worlds. So we have our own proprietary tools. I don't like to call them indicators, because the problem with indicators is usually, right, that indicators that usually everybody uses, like RSI, stochastics, Bollinger Bands, you name it, right? Indicators are lagging. That's the problem, right? They show you what happened in the past. You can always tell, because here and there, that's why this and that happened. But when it comes to the future, it's a little bit, right? That's why they're lagging, right? So that's why our tools, I don't like to call necessarily indicators, but everybody knows what's meant with indicators. So they are tools that indicators, but they're proprietary tools. So we develop them in-house. So, but they are more like fundamental tools, right? So what we do is basically we use these fundamental tools as a setup tool. So we have to differentiate between two things. We have a market timing tool, right? We use, yes, kind of technical analysis in the sense of supply and demand, also price action to get into the market, right? This is like the market timing. But what is more important is like the fundamental aspect of, we can also showcase that on the chart, by the way. It's not like going through KPIs and then interpreting these KPIs. No, we can show them kind of, these are technical tools in the sense they're very objective. We have them on the chart, but they are derived from fundamental values. So and we call them basically, these are our setup tools to get biased in a direction, right? Whether we are bullish, bearish, or neutral, stay away from the chart. So this always comes first. So we look at our fundamental proprietary tools, whether we are bullish or bearish for a specific market asset. And then if we say, wow, we are bullish on that market, for instance, like, wow, we are bullish on gold during that period of time, let's time the market, right? Then we use our supply and demand price action strategy to time the market, our entry, our stop loss, and our targets, right? So it's basically the best of both worlds, fundamentally setup tool and technically the market timing tools.
All right, well, thank you for the introduction, Bernd, and I think now's the right time to move on, and so you can actually show us how do you trade.
Yes, why not?
All right, and here we are with the trading platform that Bernd is currently showing, although we do not see him. So Bernd, this might be a little confusing to some of the traders out there. So could you describe what we're seeing?
Yes, so this is TradeStation, so tradestation.com. This is the platform that we use to do purely the analysis, right? It's like any other charting software, but this is basically where we coded they use their own coding language, which is called Easy Language. And this is where we coded our fundamental proprietary indicators on with their own trading language. So that's why we are using this for pure trading analysis. So what we also believe in, because with TradeStation, we can plot the underlying asset, which here you see now HGC, which is the gold chart, right? So there are hardly any, so what you might always, what other people might usually do is when they do gold, right, they do like, they chart any kind of derivative, right? XAU, USD, the spot gold, or any other derivative, what is provided by a broker. However, when we do the analysis, we want to do the analysis on the real deal, which is the futures underlying asset, right? So that's why we do everything through TradeStation. The whole analysis process on all the markets we do on TradeStation, right? And then we basically, once we have done the analysis, we can still execute wherever we want. So when I trade with FTMO, I use CTrader. I really love the platform. Again, this was a surprise. I only knew about MT4, MT5, and to be honest, not a big fan of MT4, MT5. It's it's a little bit old school. Difficult to even calculate position size if you don't have a third-party tool on your hands. But CTrader again was really surprised, positively surprised, because it's really nice to execute the trades, to calculate your position size, even with percentage risk. So it's perfect to trade with CTrader. So my process looks the following. I analyze my markets through TradeStation, and then I execute basically on CTrader.
Okay. Now, let me just interrupt you there. Why would you say it is important for you to trade on the real underlying asset instead of the CFD derivative, right? Because some traders might say that the CFD actually copies the actual price. So why is it so important for you to try the actual underlying asset instead of the derivative?
Very, very good point. The trading part is not really so important. We can trade the execution. We can trade on any derivative. We can trade on any CFD product. But the analysis, now it only comes to the analysis. The analysis has to happen on the real market, on the underlying asset, because sometimes the chart looks a little bit different. Yes, the derivative, that's why it's derivative, is derived from the underlying asset. But the underlying asset sometimes, if somebody is familiar with the underlying asset, like futures, they move a little bit different, and you see some things that you don't see on the derivative. Like for instance, on index futures, there it would be like, we could talk about index futures for hours. There you see like important gaps that you don't see on kind of derivative market, because of the algorithms they use for the derivatives. These gaps are closed, and it just shows like a normal candle, where sometimes in the real futures you see like gaps that are really important for the entire analysis process for us. So that's why we use, when we do the analysis, we need to do the analysis on the underlying asset. But then the execution part we can do on any derivative, right? And also myself, because then we trade kind of CFD stocks that I trade with Ftmo, right? And also the cash market, US 30, US 100, and so on and so forth. But you have to understand, like, and sometimes even the pricing is not really accurate, like the derivative pricing is not 100% in line with the real market. So you have to kind of improvise sometimes a little bit with your entry, with your stop loss and targets, right? So for us, it's necessary, and I think it's overall like very, very important to analyze the underlying asset, the futures, and then based on that, you can still place the trade on the derivative market.
Okay, thank you for the explanation.
Yes, cool. So let me go through a trade that I took a couple of weeks back, actually already a couple of months. I think this was like throughout my first month with FTMO on gold. And let me go through my analysis process. So you see a couple of charts here, but I'll guide you through the important charts. So we start with a higher time frame chart, and I'll open that here full screen, which is the HGC. You see here, that's the gold continuous contract, the futures chart of gold. And what I was doing here now is, and this is also nice that you can do that with TradeStation, you can do nicely back testing by actually removing the candles. So what I was already doing, preparing the chart, and I went back to, you see here the date, 7th of July 2022. So I deselected all the current candles and the upcoming candles from 7th of July. So the chart is basically pretending that today is 7th of July, and you can do nicely back testing.
Okay.
Right? So I prepared these charts already.
Good.
So what you saw on the weekly chart on gold is basically that big drop, like already a couple of weeks, like red candles and kind of a bearish sentiment. Even you could call it a downtrend here on gold. But what is really important is what you see down here is what we call the campus. So our licensed investment consultancy is, by the way, called On My Trading Campus. So we call it the Campus Smart Money Index. So what it does is that there are two lines here. There's a blue line and there's a red line. So what it does here, let me deselect quickly the red line. Here's false. And just show the blue line. So you have also two horizontal lines that you see here in green and in red. So when the blue line, so why is it called Smart Money Index? Because it follows the smart money. What is smart money? Smart money, you could call it the commercials, the big banks and institutions, right?
Yeah.
Just
It's always smart money and the dumb money.
Exactly, and the ones that are moving the market, right? And this is the smart money, the big banks and institutions, right? For instance, it's just interesting. I just read 2 days ago when Bank of America was releasing their Q3 results, that their own trading desk in Q3, they had 0 losers. Can you? I mean, this is impossible for a retail trader, right? 0 losers. This is like in a whole quarter. This is impossible, right? Only banks and institutions can do that.
0 losers in a whole quarter?
In a whole quarter, right? That's what they reported in Q3. Bank of America, 0 losers in a whole quarter, right? 0, not even 1.
Crazy.
This is like, yeah, it's crazy, right? This is smart money, right? They move the market, right? They can move the market up and down. They have the, it's very important to understand, they have the buying power. Not even if all retail traders come together and want to buy the gold market, they cannot move the market, full stop, right? It's always the institutions that move the market. So as a trader, you have to be aware of that and acknowledge that fact. So, but we have a tool here that can represent that kind of smart money and what the smart money is doing. Again, remember when I said we have to differentiate between the two kind of layers that we are using. We have the setup tool to become biased, right? Bullish, bearish, neutral. Mm-hmm. And then we have the timing tool, how we get into the market, our set parameters, and our entry, our stop loss, and our target. So now we are looking, hey, are we getting bullish on gold? Are we getting bearish on gold? Or should we stay neutral on gold? All right. So this is our setup tools that we are looking at. So we look at the smart money now at the big banks and institutions. And if the blue line is above the green line, then banks and institutions are bullish. And if the blue line is above the red line and below the red line, then they're bearish. Right? And if they're somewhere in the middle, then they're just neutral, and then we might stay away from that market as well. Mm-hmm. Oh. But what we can clearly see here, and as I said, right, we're doing that back testing, this is beginning of July, they are getting very, very bullish, right? See that here? Our snap mode is on. They're getting very bullish. They are above the green line. Right? It means they are bullish. So maybe we have to get bullish as well. Right?
Could you maybe put a little explanation of what exactly do the green and the red line represent?
Yes, I mean, this is just for us a marker. The red and green line. It's like basically you have like so all the way on the top. You see here that it goes from 0 to 100. So it's like percentage, mm-hmm. right? So it's like it's our proprietary tool. So the way how we calculate these algorithms, this is proprietary. So okay. I cannot give you a lot of more details, but it's basically, you see here, it says on the right, on the axis, 80%. So everything, this is like everything from 80% to 100%. This means that they are extremely bullish, right? And you see below that red line, the red line starts at 20% and goes to 0%. So it means they are extremely bearish on that particular market. And in between, it's like, you could call it equilibrium. It's between 20 and 80%. This is when they are neutral, right? It just represents, like, for us, okay, like a kind of a marker where we say, okay, they're getting bullish or they're getting bearish. That's what it represents, basically.
Okay, thanks.
So you see now they are above the green line. So for us, they're very, very bullish. Now, let me add an icing on the cake. If we can see what the smart money is doing, and you mentioned, you stated that already nicely, there's always smart money and there's dumb money, right? Because the financial market, I always like the reference, the analogy of a poker table, because trading is nothing else than a poker table. What I mean by that is like everybody sits on the same table, right? It's like that Bank of America that don't lose, Goldman Sachs and JP Morgan, and also every single retail trader and also grandma and grandpa, right? They all sit on the same table. It's basically just like a distribution of money. And if like it's a zero-sum game, if one party wins, the other loses, right? Mm-hmm. And most of the times, right, the smart money, which is the banks and institutions, they make money, and the dumb money, who is the dumb money, they lose, right? And unfortunately, right, it's like the single individual, right, the retail trader who loses. So what we can showcase here as well is what is the, I don't like to call it, let's not call it dumb money, right? But let's call it what the retail traders are doing, all right? Let's look at what the retail traders are doing. And what do you think, what they are usually doing? Are they on the same line than the smart money, or should they be the opposite? What do you think is happening usually?
I guess usually it is the opposite.
It's exactly right. And what a surprise here, right? What a surprise here. Look at this. That's if we look here, in this case, right? In this case, the retail traders, so it represents the retail traders, they're right now very bearish. It's not always the case, right? The retail traders are not always wrong, right? Sometimes, right? Sometimes they are wrong, and most of the times actually, but not always. If you look, for instance, here in this case, when this was like back in March 2021, we see kind of a similar scenario when they were the smart money was extremely bullish, the retail traders were extremely bearish, right? And this is, and you see what happened then with price basically went up. So this is always a very good forecasting tool, what's going to happen in the future. So you see that here we have already, if we talk about rules as well, this is very important rules that if I want to be in a trade, I want to trade with the smart money and ideally against the retail traders, because usually they are wrong, right? So this is one tool we are using, right? So this is what we call smart money index. Now let me show you another very interesting tool. We have one more, but I think the time is not enough, so I'll focus on that tool now as well. Here, that one is not important here. Now let me make this a little bit bigger. Now we look at the daily chart here, gold daily chart, right? You see that big massive drop a couple of days prior. Also, we see price basically stepping down, and then we see that big drop as well. And what you see down here is basically, we call that Campus Algo forecast. So what it does, it actually, and that's why I say I like to call it forecasting tools and not indicators, because indicators are not telling you what's likely happen in the future, but our tool here is telling us what's likely happen in the future. And you see basically, let me get this vertical line here, it gives you day by day exactly what the tool is basically expecting with price. This is on that particular day, 5th of July. You see it's basically the next day. So I moved my vertical line to the 6th. So it expects the top here, right? Then price is gonna then price is forecasting is gonna get another drop. But what you're gonna see here during that period of time between the 7th and 20th, you see on gold, we should bottom on gold, right? That's what the tool is not going lower. You see the lines not going lower. In fact, what you see here is that the bottom should be around the 20th of July. This is what our tool is telling us, that the bottom should be close around the 20th of July, plus minus a couple of days, right? No tool in the world, right? We don't have a crystal ball. Nobody has a crystal ball. This is close to it, as close as it gets, but nobody has a crystal ball, right? It's basically telling us, hey, don't continue selling gold. Gold is bottoming at 20th of July and is rallying until, you see it here on the top, around end of August, right? You see the price is going to go up, right? How far price is going to go up? The tool is not telling you that. It's not telling you gold is rallying 100 points, 200 points, 300 points. This is where you have then to use your technical analysis, your supply and demand, price action, and so on and so forth. But it's telling you that gold is very likely to bottom around the 20th of July. And as you see here, is topping around end of August. And then what is happening, and you see the forecasting goes even further. You see end of August, we make the top. and then this was it, and then we can continue shorting gold again, and it basically goes down until end of September and so on and so forth. So the tool is also dynamic, meaning based on price action, it might slightly change one or couple of days. So that's just to keep that in mind, right? So now this is another tool that we are now, okay, you see, we looked at our smart money index. The big banks and institutions are bullish, so we should get bullish as well. The retail traders are bearish. This is for us the icing on the cake, so we should stay bullish, right? And our forecasting model is telling us gold soon is gonna bottom as well. The drop is gonna stop, and we're gonna see a rally, right? So for us now, again, set tool, right? It's telling us, hey, let's be bullish on gold, and let's look for any kind of demand. So we use supply, demand, and price action to basically get into a trade. So let me now use the back testing, our TradeStation back testing tools to basically go add 2 more weeks on the chart. And you see basically here.
That's the bottom.
You see, and that's exactly 1 day. You see here, it's like plus minus 1 day. This is basically, and you see here also, this is 21st of July. This is like bullish and gold thing. Right? And then we use price, and then now we know we are bullish. We know the bottom is here, right? Now we have to use supply and demand and like price action tools to get into the market, right? Because we have to find an entry, we have to find the stop loss, and we have to use basically, we need to trade with proper profit margin, meaning with a proper risk to reward proposition, right? If I risk 1, right, whatever it is, if I risk 2%, 1% on a trade, I want to at least make 2%, 3%, 4% on that particular trade, right? I want to have a proper risk to reward proposition. So this is basically where we get in the trade, right? Basically to say, all right, we enter above here, we put stop loss below, for instance, right? And then we basically stay in that trade. And let's see again, right, how long we were able to stay in that trade, right? We say the forecasting tool is telling us until around end of August. Let's see again, customize. We go now 1 month to the future, roughly here, right? You see basically here we were not able to stay until the end of the month, but we were able to stay in the trade until basically at least here, right? And by the way, this is where we basically then also use, again, as I said, our supply and demand strategy, where we see, okay, hey, here's a supply zone, right? Here's a weekly supply zone on gold. This is where we have to then at least start aggressively trading, right? And if we look now at basically our tools, right, that we were able to stay in the trade from here to here, right? 1 to 2 risk to reward ratio, basically, and get out before that supply zone started trading, right? So this is basically then how we get into trades with like some technicals, all right?
Okay, so basically, in a nutshell, they're trying to stay in a direction with the big banks, and ideally also trading against the retail. And
exactly, that's the ideal scenario.
That's the philosophy behind trading.
Yes, exactly. Yes.
Okay. Are you always using these in the well? I wouldn't call them.
Indicators.
Yeah, indicators, exactly. But the tools, yeah. Are you always using the tools with all the trades that you're putting into? Okay.
With all the trades. So we have one more tool. We call that valuation index. So we value the market against another market. Like, for instance, we look at undervalued factors versus, so for instance, when I trade stocks, equity indices, I want to see undervaluation versus the interest rates. I want to have them undervalued versus the interest rates. So this is another fundamental tool that we look at. It's a setup tool. So if they are overvalued, for instance, On gold, I have gold open here as well. Here on gold, I like to value gold versus the US dollar, right? So what I want to do here is basically, now let me go here also to like the around the 21st of July here. So if that our index here, valuation index, is here green, it's undervalued versus a specific market. And if it's up here above that black line, right, it's representing just like the markers of extremes. Down here undervaluation, up here overvaluation. So in gold, I want to see undervaluation versus the dollar. And in equity indices, in stocks, for instance, I want to see undervaluation versus the interest rates. Or if I want to short it, I want to see overvaluation versus the dollar here on gold. And if I want to short stocks, I want to see overvaluation versus the interest rates. And for instance, you see here, if you do a little bit of back testing, here we were overvalued versus the dollar. And this is where we saw that big drop. You see it's every time, basically, look at this, every time we are overvalued, you're seeing versus the dollar.
There's a drop following.
There's a drop following. So you also know that you would never want to buy once you're overvalued. Never. Right? And you want to look to buy once you are undervalued. Right? So now this was another tool, setup tool that we were like telling us. You see here technically bullish daily bullish engulfing. We can get into the market now, but we are also undervalued. So another rule that is ticked, right? Because we have to have, as traders, it's very important that you have very objective rules. And the rules that I showed you are very black and white. So as a trader, you have to be black and white. You need these rules, right? That you just, okay, tick in a box, because you can never be, no trade in the world is 100% probabilities. No trade in the world is 100% certain, right? So it's always, what you can do as a trader, you can add probability. And this is what we are doing here, right? The more rules are in place, the more probability you add in your favor. And this is what we are doing. Rule map, nice probability. Now let's get into a trade as objective as possible, right? And then you can start trading very mechanic, very, very robotic, so to say, and then you are able to become consistent. Otherwise, how else to become consistent if you cannot be objective, right? It just doesn't work, right? So, and by the way, if I go here, also just showcase you, if I go here 1 month further, or even I do like 1 week, 3 weeks. All right. Let's see if the charts are loading.
Yeah, we got a little freeze. By the way,
we got a little freeze anyway. Yeah.
Also, I'm thinking that this robotic approach that you're mentioning, right?
Yeah.
You always you just gotta tick the boxes. It's also easier for psychology because you know, okay, it either does check all the marks and I'm gonna enter, or it doesn't and I'm gonna stay away, right? Exactly. And then
yes, it has to be.
Yeah,
has to be the only way. It's the only way. How else? Right? Exactly. Perfect. Yeah, you're right. Must be mechanic as possible. Otherwise, you cannot become consistent. This is like a major rule in trading.
So yes. I believe there was something you were intending to mention here.
Yeah.
So...
What I wanted to show you is that at this point, right here, it's obviously right. Everyone who is aware of supply and demand, that up here is a supply zone, right? But what is important for our tools is that up here, right, on that kind of candle, we should get out of the trade maybe as well. Yes, we have a supply zone and we have an objective tool that because we are overvalued, that we should get out of gold because we are getting overvalued. What we have seen in the past, right, every time we are overvalued, we should basically either start shorting, or if we are long, we should get out of the trade, right? Because look at this, how crazy that is. Every time we are overvalued versus the dollar, right? Look at this overvalued drop, overvalued drop, overvalued drop, overvalued drop. Here we are overvalued. So if we are long from down here, let's better get out of that trade because it's very likely that price is going to drop, right? So that's why it's also a nice tool that we developed, is the valuation tool, so we can combine basically compare two markets in terms of valuation. So, and when I trade stocks, I use US interest rates to compare both of them, right? So if we buy stock, we want to have the undervaluation versus interest rate, and if we short stocks, or if we should get out of a long position, we want to see overvaluation. Right?
Are you trading primarily the US stocks or the European equities as well? US stocks.
well, throughout my, let's call it FTMO career so far, I traded one European stock only, but the rest were like US stocks. Yes.
All right, Bernd. Well, thank you for showing us how you use the trading platform, and now let's check the actual results in your account matrix. So let's move on there. Alrighty, and here in the account matrix, we can see Bernd's progress on the FTMO account. So we can see a really steady growth with only one major loss towards the end. So here you finished with a profit of $45,000. So
yes, correct.
Yeah, I can see that. You actually never went below. You never went below the initial balance because your max loss is 0. So that's very nice.
It's very nice that it started strong here.
Good. So could you maybe scroll down a little and show us what were the exact trades that you took?
Yes. So as we spoke, right? I mean, if you look at the markets that I traded, right, it's mainly equity indices, right, and some of the stocks, right, Baba, Microsoft, Apple, Nvidia, and the Nasdaq, which is the US 100, the Dow Jones, which is the US 30, one time or twice, actually the S&P 500, and yes, so mainly indices and stocks, right, and one European stock here.
Okay, so I can see the most profitable trade you have, the short on Volkswagen. You held it for more than a week. So
well, actually here, I mean, there's even more. I think down here.
Oh yeah, right.
Yeah.
Okay.
I think it's another short, right? It's another short. So actually only, yeah, you're right. Actually only 3 shorts. The rest were buys during that specific period, right? The shorts were very profitable here as well, right? The Dow Jones, and I had them for 5 days, and the Volkswagen I held it for 7 days, right? So yes, that's what you're not getting limited as a trader, right? You can hold trades as much as long as you want. That's what it's so nice about it nowadays.
So is that what you usually do? You hold trades for a couple of days? Because there's a huge variety actually, because I can see some trades that you held only for a couple of minutes, then for a couple of hours, and then there are trades that you held for over a week. So yeah, so
yeah, I would say everything between, I mean, in general, I would say you see here there's a stop out and it only took 30 minutes, right? so I think when we get stopped out, we rather get stopped out quickly, right? But then once we are in a profitable trade and it goes in our favor, right, and the direction is correct, I think then we can stay. The longer we stay in the trade, the more profitable the trade becomes at the end of the day, right? So we are trying to stay longer in trades, yes, so they become more profitable. That's what I'm usually do, but it varies, as you see, right? Sometimes it's like I find the setup. Well, usually that my trades are on the execution is then on daily charts, but sometimes I go down to 240-minute 4-hour charts where I find setups sometimes even 60 minutes on US indices, but usually it's between daily and 240 minutes, but usually daily. So
okay. What I like to see also is the stats. So could you just scroll down a little so we can see the stats that you have? Statistics. All right. So we can see you've been selling, or that sales were more profitable for you than buying, although that they were pretty on a similar level. And the open time hours, that is pretty interesting because we can see that you're trading mainly in the afternoon. So in the US session. So
yes,
are the sessions important to you?
Yes, I mean, the stock market opening is really important, right? So my trading day usually begins. So the stock market, right? So
yeah, that makes sense.
Stock market in the US, so Dubai time right now, the stock market opens 5:30 p.m. Dubai time. Actually, on in a couple of weeks, 6th of November, there's daylight saving, so the time shift, right? So that the stock market will open 6:30 p.m. Dubai time. But right now it's 5:30 p.m. Dubai time, and it closes midnight. So this is the time where I basically spend time in front of the chart, or have at least one eye in front of the chart. So especially the opening of the stock market when the stocks open, this is important to me. So that's why it's probably the metrics there. Yes.
All right, great. So I think we can wrap it up. So thank you for showing us the account metrics, and let's now hop on to the final part, which is the future, your future plans.
All right.
All right, and in the final part, let's ask Bernd what are his plans, because in the beginning of the interview you mentioned the story, which was quite extensive. So you went from working in a regular job, then moving to trading. Then, you know, you said that trading is a lonely job. So you started to searching for something more, and now you basically build your own business that is based around trading. So is there anything else that you'd like to pursue?
Well, we obviously want to expand our trading business, our education platform. That's basically predominantly what we're gonna want to do, right? We want to continue what we established. We want to grow steadily, and continue trading consistently, right? As I said, trading is a mental game as well. It's a fight against yourself rather than the market. So you have to stay consistent. You have to stay focused. So it's a challenge basically every day. So yes, that's what we're gonna do, and we continue trading, right? So.
Okay, now let me just try to understand what you're doing, like what is all of your business. So you're trading with FTMO, that's one thing. You're already having the max capital allocation of $400,000. Then you're teaching others, right? You're having your business, and I also assume you're managing your own funds or some other funds on a live account.
Some other funds, some other funds, other accounts, and my own funds, right? So it's all trading related. The entire business is just pure trading related. Yeah.
Wow.
trading. Yeah.
That is a lot of stuff. Do you think you can manage it all?
Well, we have a team. It's not only me, right? Now we have a rather big team behind. Not big, but what I mean, depends what you consider big. But we have a few traders behind that, right? Who are also helping trading, educating, analyzing the market. So it's not only me. We have an entire team.
All right. Now, a question that I also like to ask quite frequently, what would be your advice to some of the people that are really new to trading? They maybe want to take their first FTMO challenge, because again, you have a lot of experience. You've been trading for a decade and obviously quite successfully. So what would be your advice to all the new guys out there who are maybe just, you know, watching this interview and saying to themselves, okay, wow, that seems pretty cool. I'd like to pursue this career as well.
Well, there's so many advices I could give, right? But one of the biggest advices is like, I mean, it might sound, I have to say honestly, right? It might sound obviously from my point of view a little bit how to say, not really objective, but get education, right? This is trading is a skill, and trading is a profession like any other profession in the world. Whether you're going to be an engineer, a lawyer, or a doctor, right? A pilot. It's a profession. So get proper education wherever you get that. This is something, you know, you have to decide for yourself, but start correctly, right? So don't start like the all other, not all, but most of the retail traders who go on YouTube, watch a few videos, and go out there and do like some trading, because this will never end well, right? So start properly, start correctly, right? So, and get some education, right? And then start slowly, because trading is a marathon. It's definitely not a race. So it will take time, like any other profession. You have to have the mindset of a business owner, because when you start trading, regardless of the amount of money you start, if you start your first FTMO challenge, you start your own business, right? It's like a startup business, and startups need time, right? And so you have to give yourself the time. It's not like you become a trader in 6 weeks, you know, become a trader in 6 months. It takes like 1-2 years until you can see some consistency. You have to give yourself that time, right? And this is really important to stay realistic and stay true to the business.
All right. So Bernd, thank you for being here, and thank you for sharing your trading story. And well, that's FTMO.